So this is Physics 2016-101A assignment, and we're going to talk about finance and design on Nike, and there are three group members, and there are Chen Yanli and me, Zihao Huang, and the Harrisons. So the first I want to talk about is the Nike capital structure, which is made up of debit and equity. Nike demonstrate a moderate inclination towards debit finance. As of the fiscal year 2024, Nike total debit stand at $11,952 million. The company realized minimally in own short-term debit, instead using the operating cash flow and short-term loans to meet immediate financial need. Long-term debit play a major role in Nike financing structure, with the company utilizing bond of the varying majority and the common rate to the mitigate maturity risk. The debit to equity ratio stands at 83%, reflecting Nike relies on debit for financing. On the equity slide, Nike shareholders' equity total is $14,430 million in fiscal year 2024, with approximately 1,530 million shares outstanding. To enhance shareholder value, Nike offered dividends of $1.45 per share. With a payout ratio of 39%, the company also conducted share buybacks, further reinforcing its commitment to shareholders. And the next is the hybrid instrument and liquidity for the Nike capital structure. And for the hybrid instrument and liquidity, Nike does not insure any hybrid instrument, meaning the company relies solely on debit and equity financing to meet its capital requirement. In terms of the liquidity, Nike is in a strong position with cash and short-term investment totaling $11,582 million. The high liquidity ensures that Nike can meet its short-term financing obligation while maintaining flexibility for the future opportunity. Nike capital structure is characterized by a stable balance between the debit and equity. The company relies on the long-term debit, reduce the risk associated with the repayment timeline. And its growth is supported by the strong cash flow and shareholder equity. Through the constant dividends and stock buyback, Nike demonstrates its commitment to rewarding shareholders while maintaining financial stability. The next one is Nike major revenue and expense source. So let's take a close look at the Nike major revenue and expense source. In fiscal year 2024, Nike general total revenue is $51,386 million. And geography, Nike operates globally with its major market in North America, Europe, and Greater China. This geography diversification allows Nike to spread risk and ensure steady income stream. From a from a product perspective, Nike revenue is derived primarily from the three categories. Footwear remains the company's largest contributor to the revenue. Apparel also provides significant income, including the sportswear, casual wear, and function clothing. Last one is accessories and equipment, such as sport gears and bags, acting as a supplementary revenue stream. On the expensive side, Nike spent $812 million on capital expenditure during the fiscal 2024, investing in growth and operating improvement. The cost of sales, which including the manufacture, purchasing, and distribution, remain a key expenditure. Additionally, SG&A expense account for 32% for Nike revenue. Highlighting this significant investment in management and marketing effort, Nike also prioritized innovation, allocating substantial resources to research and development to maintain its competitive edge. Finally, with a net profit margin of the 11.09%, Nike demonstrates strong operation performance and effective cost management.
So now let's look at the question 3. The Nike's main competitor. The Nike's main competitors include Adidas, Puma, and Under Armour. Adidas is the world's second largest sports brand, competes directly with Nike in running, training equipment, and sportswear. The company's innovative products and technologies like the Boost midsole material have helped it to capture a significant share of the market. Puma is another globally recognized brand, challenges Nike across various sports segments and enhances its influence through collaborations with renowned athletes. Under Armour is a strong competitor in the North American markets, particularly in football, basketball, and training equipment, known for its high-performance gear and advanced technologies like heatgear. And Under Armour attracts numerous professional athletes, reinforcing its position as a formidable competitor to Nike.
I'll be analyzing Nike's share price performance over the last 12 months from November 2023 to October 2024. This analysis will compare Nike's movements to the S&P 500 index as well as Adidas and explore the macroeconomic and company-specific factors behind the fluctuations. In the initial month, Nike's share price showed strong momentum, peaking at $122 in January. This growth was likely due to the holiday season, typically boosting demand, especially for athletic and lifestyle products. Another factor is the positive fiscal quarter two earnings, which reflects higher than expected revenue growth. We can also see the S&P 500 also gained a lot during this period, caused by easing inflation and steady consumer spending. From February to June, Nike's share price declined sharply, falling below 100 by June. Key reasons for this drop include weaker than expected earnings, Chinese market slowdown, and analyst downgrades. Firstly, Nike's revenue growth slowed, and higher costs from inflation and supply chain pressures reduced margins. These raised concern about the company's profitability for shareholders. Secondly, China, as one of Nike's largest markets, faced a reduction in consumer spending. Slower growth combined with the rise of Guocao trend, which is also known as a movement favoring domestic brands, also reduced Nike's market share in the region. Lastly, several firms, including TD Cowen, Stifel, Barclays, and Morgan Stanley, downgraded Nike's stock, citing slower growth and competitive pressures. These downgrades sent a strong negative signal to investors. Meanwhile, as we can see, Adidas managed to perform well during this period, benefiting from better cost management and strategic agility, which we'll discuss later. Nike stock hits its lowest point of $71 by mid-July, reflecting a sharp decline in investor confidence. Nike's financial reports for quarter four also revealed slower revenue growth and higher operational costs, compounding concerns about its competitive position. During this period, the S&P continued to rise, highlighting that Nike's struggles were largely distinctive rather than market-driven. After hitting its new low, Nike's share price showed signs of recovery in August, ending October at $80. Factors behind these was because of the return of Elliott Hill as Nike's CEO in mid-October boosted investor optimism, as Hill is associated with successful strategic initiatives before. However, the rebound was limited as broader challenges such as declining market share in China and margin pressures still continued. Throughout the year, Adidas consistently outperformed Nike, ending the year with a 25.8% gain. Despite facing similar challenges, Adidas benefited from better cost control and operational efficiencies, strategic focus on sustainability and innovation, which did well globally. Furthermore, the S&P 500 gained nearly 33% over the same period. Nike's underperformance compared to the index reinforces the role of company-specific challenges in its decline.
So, for question 5, in the past 12 months, two significant events impacted Nike's stock performance. First, on the positive side, Nike enhanced its brand image through strategic marketing efforts. By collaborating with top athletes like LeBron James and launching promotional activities during prominent sports events, including the Olympics. And Nike aimed to strengthen its image as a leading sportswear brand. This initiative likely helped increase consumer interest and brand loyalty, contributing to a modest stock price increase. Over the past months, Nike stocks rose by approximately 1.2%, reaching 81.48 within the range of 80.98 to 86.52, reflecting the market's positive response to Nike's high-profile branding efforts and global presence. And conversely, Nike experienced a major setback in its stock performance due to declining sales and unfavorable market conditions. In the fourth quarter, Nike reported a significant drop in both online and in-store sales, partly due to economic headwinds and increasing competition from rivals like Adidas. The decline in sales led to a drop in investor confidence, causing Nike's market capitalization to shrink by 28.4 billion. This downturn was fought by rating downgrades from notable financial institutions, including JP Morgan and Morgan Stanley, which cited intensified competition and market challenges. As a result, Nike's share price saw a historic drop, reflecting concerns over the company's future growth potential and competitive pressures. These events highlight the dual forces affecting Nike stock. While strategic brands partnerships help enhance its market position, external challenges such as sales declines and competitive pressures pose risks to its financial stability.
Let's analyze two key events for Nike in 2024 and how they align with the efficient market hypothesis. The first event is a positive one. Nike launched a global brand market capitalized activity during the Olympics, collaborating with the top athletes. This activity was expected to strengthen Nike brand image, increase its market share, and attract more customers. Following the announcement, Nike's stock price raised and trading value increased significantly. This along with the semi-strong form of the efficient market hypothesis, as the market quickly absorbed the information and reflected it in the stock price. On the other hand, Nike also faced a negative event in 2024. The company reported lower than expected sales in the fourth quarter, coupled with the rating downgrade from multiple financial institutions. This led to a sharp decline in Nike stock price. The market immediately and strong reaction demonstrated alignment with the semi-strong form of the effective market hypothesis, as the negative information was repeatedly incorporated into the stock price.
Nike's stock currently faces significant challenges, including weak earnings, operational inefficiencies, and market share losses in China. These issues outweigh its long-term brand opportunity. What we recommend is to decrease holding in Nike and considering investing in better performing competitors like Adidas or a stable market index like the S&P 500. However, monitor Nike closely for signs of recovery, such as improved financial performance, effective strategies under new leadership, and efforts to rebuild consumer confidence in key markets. If these indicators emerge, a buy opportunity may be revisited in the medium term. Thank you. And here's our references.